Back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. And here we are with the SPY, the S&P 500 index, pulling back on a Friday, right? And it's coming right back down near the 52-week lows of 357. The next 52-week low is 355. And on Thursday, we had hit a new 52-week low of 348. And the question mark is this going to hit a new 52-week low or find support up here at these levels to start that staircase effect, right? Now, today within the volatility, our SPY bot since 9:50 a.m. sent out a bear indicator. And from that moment forward, outflows crossed the midpoint to the downside. They stayed below for most of the day, and put options went up 300% plus within hours, guys. If you guys want to receive this clarity and edge over the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY trying to find support at a previous 52-week low of 357, and this slight downward trend here as it tries to slow down, it starts to look kind of like this little curve here, is very critical on whether it's going to have further weakness or turn into a support to bounce off of. And that's what we're going to break down in today's video, what our inflow versus outflow and bull and bear indicators are showing. But before we do, I want to share with you guys the home run opportunity I mentioned on Friday over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the stocks I mentioned on Friday morning. They each gave jumps of 5 to 10%, 10 to 20% plus, but one of them turned out to be a home run, and that was ATXI. We caught this one in the pre-market as it was starting to pick up on the inflows, consolidating here. Inflows picked up and stayed above the midpoint, full strength on 42 vision, into the bell and after the bell, and it gave a highest point of 30% plus, guys, within minutes to an hour. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord. We look forward to having you join us, and let's jump into these charts. So here we are with the SPY, the S&P 500 index, and right now we're at a very interesting level here after having such a big run here on Thursday from a dip area into a rip area. And now we're having transitions from a rip area going towards a dip area. Now the end of the dip area is the white with red borders. We haven't hit that yet. We've had consecutive red bars, and right now it's still in a staircase effect higher than the lows that we hit on Thursday. So this is where it gets very interesting of what just happened on Thursday. And we're going to look at different articles and key levels here on the charts that are significant to what's going on within the volatility. I'm going to pull up the bull and bear indicators and the inflow versus outflow indicator, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, and getting connected to our bots as well as become part of a growing community of members using these resources to maximize in either direction within the volatility by receiving this clarity and edge, whether stocks are going up or going down. And you can now gain access to it as well. And I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY under a bear indicator here, transitioning from that last bull indicator, and also the transitions from the bright green. If it's your first time here, this is what we call the rip area, and the dip areas is the white with red borders, which is the one piece missing here. Are we going to reach it or find support here and bounce off these levels? Another thing as well is the fact that the inflows started to slow down and outflows began here in the afternoon on Thursday, and you could see that slowdown there in consolidation. And then going into the pre-market and opening bell on Friday, the outflows were really close to the midpoint, and all they needed to do was cross, and there was going to be further weakness in the chart, and that bear indicator was there as an extra layer of confirmation. And the transitions here on 42 vision had been completed from dip area to rip area, from extreme weakness to extreme strength, and here we are below the midpoint on the 30-minute, and we're going to look at different time frames as well and these articles that I want to show you guys because this is important. Now, why did the stock market fall so fast? It all had to do with consumer sentiment. It was actually expected for it to be lower than the expectation, which was 59. Anything below that was going to state to the markets that the Fed is doing their job, right? It turns out that the number came in higher than expected, meaning that the consumer confidence is really high. We had CPI data month over month going higher, meaning that the consumer confidence and the CPI do align together, and then implying that the Fed may have to go ahead and work harder, be more aggressive than expected. So a lot of volatility here, and very interesting enough, the inflows, right, on Thursday were the highest inflows that we have seen in months. The last time that happened was back here in May, and I had stated it could be shorts covering, or since we had hit a fresh new low, large investors and long-term investors were buying up that dip because that's the new low that we've seen in years, right? Since all the way up at the highs of 480 all the way to where we're at right now. So even though it's not the bottom, it's one of the lowest places that we've been so far in the S&P 500 bear market, or pullback, or correction that you want to call it, right? So super important to keep that in mind. And then we have a CIO here of Guidestone Capital Management stating that a 15% drop for the S&P 500 could be in the works, right? Still, why? Because the market has yet to price in the pending recession. Yes, we have had 2 consecutive quarters of negative GDP, but it has not publicly been confirmed yet because there's other variables to see, and that's a possibility. And this is where a lot of large investors see 15, 20, 30% drops still from where we're at. Are they right? We don't know, but there are technicals in the charts, which I'm going to show you guys in just a moment, that show us how they get these numbers and why they believe that, right? So we also have here in this article, we're not sure when or where the ultimate bottom is in stocks, or will they end up, but the violent moves like yesterday, they're talking about Thursday to Friday, tend to occur closer to lows than highs. So when you really zoom out here and we put the 1 week here, we've been in a pullback for the last several months, right? Or almost the whole entire year so far. We are a lot closer based off what they state to the lows than the highs. And it makes sense just looking at the chart. It's just no one knows exactly where the bottom is. The outflows got crossed again here back at the beginning of September, and we're only at minus 39. And the last 2 major outflows was 2020 and the lows in June, and we hit minus 60 and all the way down here to minus 80. And I'm watching that very closely here. And another thing as well is that we're in a month that historically it tends to pull back, the month of October. And not only that, it has been presented to be the bottom of markets. Now, it doesn't guarantee it's going to be that way this time or every single time, but these type of articles are coming out stating October is living up to its reputation as a crazy month in which bear markets bottom. Now, that's not guaranteed, but the fact that these type of headings are coming out, you also have this coming out in this article stating we do not know where the ultimate bottom is and where stocks will end up, but violent moves like yesterday, or at least violent moves like we've seen this week, is where we are closer to a low than a high. Now, from where we're at though, right, there's still room based off a lot of experts to go another 15, 20, 30% plus. But if you think about it, another 10 to 15% plus or 20% plus is anywhere between 320 to 290, or even go as low as 280 on the SPY, the S&P 500 index here, as we see it. And also we have to watch these outflows if they continue push lower and if these bear indicators stay in play. And right now there's one here since September 19th, and here we are nearly almost a month later still under it. So super important to keep this all in mind, and this is how it's all playing out right now, right? We're in a very volatile month. A lot of people are trying to figure out, is this going to be the bottom? Is it going to go even lower? Are we going to find the bottom now? Or what's going on, right? So right now, the key levels here on the 30-minute, the first support is 355, guys. The next one after that is down here at 351. And below that would be the 52-week low of 348, 347. Area to watch very carefully. And if we break through that, the next support is 345. to 340 area. Now, super important to be watching here these inflows. Right now, they're underneath, and then also the inflows are trying to pick up here, but the outflows are dominating. We need to see if this actually comes back up towards the midpoint and crosses it, and also if this bear indicator can get canceled by a bull indicator in the process. Now, it's not just the 30-minute trying to pick up. You could see it here on the 15-minute. Very, very close. We want to see this actually pick up and have further strength. And then on the 1 hour, you could see that right now, the stock had huge inflows yesterday. They slowed down and outflows all day on Friday. I said yesterday, I meant Thursday. On Friday, all the way down, crossed it, and further weakness here. And it's going to be important for this to slow down here and bounce back up towards that midpoint. I'm going to be watching that very carefully. And if it stays below it, the bears are going to continue to try to dominate, and those support levels will be crucial. Now, if inflows do pick up, the first resistance level is 362, and above that is 368, 367. Key levels of resistance, and most importantly, 371, 372. In the history of the chart, there's been multiple rejections there as it was trying to bring itself back up in the end of September going into the beginning of October. Slightly broke above it, quickly came right back down and rejected at that same area that there was multiple rejections back here at the end of September. So that's going to be important as well. I'll be watching those inflows versus outflows, and if those bull indicators can pop up or if these bear indicators continue to dominate. As always, guys, thank you guys so much for watching, and let's make some money.